as trade and politics link countries all over the world. The complicated link between China and Australia stands out, and this connection has effects that are felt all over the world. In this video, we're going to learn more about the currents that make this happen today and see how the ripples in China's economy affect Australia. So, let's figure out the many stories that are sewn into this complicated tapestry, from the busy mines to the quiet college campuses, from the influx of tourists to the changing value of currencies. Let's dive right in to understand this in a better way. Let's start by picturing a worldwide network of trade and money. China stands tall in the middle of this complicated web, with its threads going through many countries. One of these threads goes straight to Australia, which shows how closely the two countries are connected economically. What does it mean when the center node shows signs of stress, though? The ripples are felt all over the web, which is where our story today begins. China, which makes a lot of things, has been seeing a few holes in its economic armor. We're talking about growth that has stopped growing, a drop in foreign investments, and a rising housing problem. Also, Evergrande and Country Garden, two giants in the real estate business, are having a hard time with their finances. This worry is made worse by the shocking rise in China's youth jobless rate. It went through the roof, rising to an amazing 21.3%, just as economists and experts were getting ready to do a deep dive. Beijing pressed the pause button and stopped all further data collection. It's mysterious, right? Australia, with its sun-kissed beaches and vast mineral-rich lands, looked for business chances in China as it recovered from the pandemic. But the most recent signs suggest that things might not be as good. Let's figure this out. If things get worse for China's economy, they could hurt Australia's export-based economy the most, especially in areas like tourism and resources. One might wonder how bad this effect could be. Think about this. A drop in capital and exports could cause more people to lose their jobs. The Albanese government's budget has been helped by strong business and personal tax revenues. However, these could see a big drop. The hard-won surplus of 2022 to 23, which was a win after 15 long years, is now in danger. Before we dig deeper into this topic, we would really appreciate it if you could show us your support by subscribing to the channel. If you'd like to stay updated with the latest content, you can always choose to get notified as well. Now, let's get more specific. It's important to know what Australia-China trade is really about. Australia doesn't just trade with China. It trades with China all the time. China makes up almost a third of Australia's foreign trade. This group mostly makes money off goods like iron ore, coal, gas, and different minerals. Put metals on one side of a scale and China on the other. If China lowers its demand, the commodities side goes up, which throws the balance off. In simple words, China will buy less because their economy is slowing down. Not building as much means less iron ore, and not using as much energy means less compressed natural gas. There is a real domino effect. Iron is an important part of this story and deserves special attention. There are signs of stress in China's huge real estate market, which buys up more than a third of the country's steel. The health of this field is directly related to the demand for iron ore. Because there are fewer buildings and homes, there is less need for steel, which drives down the price of iron ore. But it's not just about the numbers and trade in a general sense. In real life, this could mean that places in Australia that were built around mining will have a hard time. Companies that work with mines will be hit hard. Even the government of Western Australia, which gets a lot of its money from iron ore payments, might have to cut back. It's also not just the mining and resources business that's being looked at. Australia's thriving tourism industry is also being looked at. Remember when it was normal for Chinese tourists to visit Australia, filling up popular spots and making a big difference in the economy? As the travel limits caused by the pandemic slowly ease, a resurgence is likely to happen. Too bad, the truth is not what we thought it would be. A small number of Chinese tourists coming to Australia is just that, a small number. A strange thing has happened. In 2022 and 2023, more people came from the island nation of Singapore than from the whole country of China. High airfares, few flights, and a ban on group trips by Beijing have all made things worse. Less Chinese tourists and the current property downturn in China are both bad news for the tourism industry. Together, they make the influx even smaller. In the background of this financial dance is education, which is often forgotten, but is just as important. Over the past 20 years, there has been a big increase in Chinese students at Australia's universities, which are well known and sought after around the world. As it turns out, services related to education are Australia's third biggest product to China, right after minerals and resources. Universities in Sydney, Melbourne, and Brisbane depend more and more on the tuition fees of students from other countries, especially China. Data from 2019 show that almost 40% of Australia's 700,000 foreign students were from China. These numbers give a clear picture of how dependent each country is on the others. But the recent pandemic and political unrest have made these areas less bright than it used to be. Since it's harder to travel and online classes are becoming more common, fewer people are going to universities that used to be packed with people. The steady flow of students in Australia is also being threatened by Beijing's growing impact on the international curriculum and its growing push for students to study in China. Different things are affected. Universities are having trouble getting money, which affects studies and plans for the future. Things like coffee shops and housing rentals near schools are also feeling the pinch. This change, along with the economic factors already stated, makes things even more complicated between Australia and China. We can't talk about this without talking about the Australian dollar. The value of this currency moves along with the price of iron ore, and recently it has been shaky, falling to US 63 cents, which is a return to the lows of the global financial crisis. The Australian dollar seems to get sick when China sneezes. These problems could hurt the Australian dollar and make it less appealing to investors around the world if they continue. But there is a bright side to every cloud. When the Australian dollar falls, it can attract tourists who want to take advantage of the better exchange rates. On the other hand, Australians living abroad are less able to buy things. So, the economic drama between China and Australia is moving quickly. China may be trying to give its economy a boost with stimulus measures, but it's still not clear how well they will work. Investing in infrastructure was once seen as a surefire way to solve the problem, but now that the assets aren't being used, it doesn't look as good. As we wait for China to make its next move and see how it will affect Australian economy, keep in mind that countries around the world are more connected than ever. A wave in one place can make waves in other places. For similar content, don't forget to check out some of the other videos on your screen.